Bra, hej och välkomna, för det är en god morgon, det är god frukost, det är jättefint väder, vi ska ha ett seminarium om gröna obligationer. Seminariet kommer vara på engelska, den som vill ställa frågor på svenska gör det. Och så kommer svaren vara på engelska. Good morning to this breakfast seminars on green bonds. This is the third in the series of seminars co-arranged by the British Embassy and the green think tank Fjärde. The first was on the British experience of a climate law, or the experience of a committee on climate change, and what we in Sweden can learn from this. The second, a few weeks ago, was on a green investment bank, whether we should copy the British experience and introduce a governmental green investment bank. And today's seminar on green bonds relates very much to that. In the Global Risk Report, the annual report from the World Economic Forum, they list major risks that the world is facing in the future. The majority of these risks are related to environmental problems. They list climate change, extreme weather events, water crisis, large-scale migration, often related to climate change or environmental disasters. Biodiversity loss, man-made environmental catastrophes. These risks are, according to the World Economic Forum, more severe than the risk of war or financial crisis. Thus, there seems to be a lot to be done. There also seems to be capital available. At last seminar on the Green Investment Bank, we discussed if the Swedish government should set up a green investment bank, or if the Swedish market is too small, if that should be a Nordic green investment bank. All panelists referred to green bonds, and that a green investment bank, one of the major topics for that bank should be to issue green bonds. Several returned also to the fact that there seems to be a lot of capital floating around. Capital that are placed in low-rate state bonds today. In the Swedish public pension system, there are thousands of Swedish crowns available that needs to be invested. That money does not always seem to find good projects to be invested in, projects that could address these problems. One of the panelists from last seminar said that perhaps we shouldn't spend much money or energy in introducing a new investment bank. Perhaps the government should issue green bonds instead. If this is much easier, that might be the way to attract capital. This morning, at Swedish radio at P1, Thomas Sterner, professor of economics in Gothenburg and a research fellow here at Fjärde, he said that green bonds, that it's great that we have them, but do they add additional capital to green investments? What's the additionality? Mette?
I'll make you stand here. Hej och välkomna. Green financing is something the British Embassy is working on hard to promote, and the British government is very much for promoting green financing, which includes green bonds. And this comes from the fact that we have very strict climate change legislation in the UK, so we have to do everything and anything to promote climate policies that will help us reach this target. So green financing is seen as part of what we can do to reach our climate targets in the UK. But the UK government is also doing a lot of other things in the green financing area, which are quite small and technical, but quite powerful. For example, pension funds now have to report about their policies on ethical investment, which includes green financing. The companies on the stock exchange have to report their annual emissions. And obviously, we have a green investment bank, like many of you were here and heard about a couple of weeks ago. So basically, we love green financing. So when we saw that the Swedish government started an inquiry into green bonds, we were really interested. So that's why we invited Lillian here from the London Stock Exchange to come and give her views on the inquiry, along with Kommuninvest, Anders and Mats, who heads up the inquiry, because it's not a zero-sum game. The more green bonds, the more green financing we have, the better for us all. And we started with Lillian from the London Stock Exchange because it's such a green international financial center in London, and the London Stock Exchange have a lot of experience on it, so we thought that would be interesting to hear from. But we'll start with Mats Andersson, so he can present what the inquiry is about and what the Swedish government has asked him to look into. Thank you.
Look at the panel on the floor.
Detta. Okay, even better. So what are the flaws with green bonds? I think some are pretty obvious. We know that there are different shades of green. We're all waiting for the book of 50 Shades to Green. I don't think it will sell as much as the 50 Shades of Grey. But never mind, we need to find stronger definitions. We need to find methodology that can actually make investors more sure that they actually invest in something green. You can also ask whether holding a green bond really makes you more green. Is it lower risk? Is it higher returns? My view is that if we want to get the capital flowing into green investments, you need to find the right incentives to do so, i.e. you get a lower risk, or you can actually enhance your returns, or you get a lower cost of capital for the issuer. And I think there are needs to be looked at in that respect. Also size. We know that green bonds, the total value of green bonds today is some 120 billion US. That is less than 1% of the bond market. So still it's a niche product today, and I think if we want to make this more important part of financing the transition we need to do, we need to find ways to make green bonds grow. And we have the question was raised earlier on additionality, whether green bonds actually make more or less green investments at the end of the day. So again, in my view, if we want to mitigate climate change as long-term investors, we need to find the mechanism or the tools that can actually lower the risk and enhance your returns. I won't actually stop here. I think it's still early days for me. We're still climbing the learning curve in the inquiry. So hopefully again we'll be back later on this year with some ideas on how to make this a more important product than it is today. Thank you.
Mats, I heard what you said, but in December when you present the inquiry, will you suggest the Swedish government to issue green bonds?
Next question. No, the inquiry and what's been said is that if we have some spare time, we can look into the opportunity of actually issuing a government green bond. So it's not the priority, but I think if we want to promote green bonds, we need to get the governments to issue green bonds to make them the product that we want, the liquidity that we want. So I think it's important for the market in itself that you get governments issuing it. But you have a lot of obstacles that you need to look into. We have a law in Sweden making it pretty tough to issue green bonds for a government. Given that Riksgäldskontoret always have to go for the cheapest way of finance. On the other hand, we know that you had more or less the same legal framework in France, and they were able to issue a green government bond, and the size was 7 billion euros. So there is demand, definitely. And my view is that we don't have a demand problem, it's rather a supply problem, i.e. we need more issuing of green bonds rather than promoting the demand side right now.
Okay. There will be plenty of room for questions to Mats later. I invited Lillian up to the stage.
Is this okay?
Yeah. Mats said that we have a strict Swedish law that when the Swedish government is issuing bonds to raise capital, they need to do that in the cheapest way. Isn't it that green bonds always will be more expensive due to requirements compared to conventional bonds?
Well, the additional costs of getting an external certification should be negligible in terms of the overall cost of issuing a bond. But increasingly, you see corporates raising finance and sometimes achieving a 5-10 basis points, perhaps tighter pricing, just because there is huge demand from investors. So there might be some cost benefit for the issuer as well. But I think the example of France issuing a massive 7 billion green bond recently just shows that it can be done quite efficiently.
Lillian, what's your understanding of the inquiry and your experience of green bonds from the London Stock Exchange? I'll leave the stage to you.
All right, thank you. So good morning, everyone. It's my honor to welcome you all this morning, and thank you to the British Embassy and Forest for inviting me to be part of an action-oriented and forward-looking conference. And also congratulate Mats Andersson for leading the Swedish inquiry and for your remarkable work. Green bond issuance has become a global phenomenon, reaching a record daily $1 billion last year, which is equivalent to more than $9 million an hour, which is quite impressive, and almost doubling the 2015 total. China became a leading issuer this year, and Indian issuance grew rapidly. And green bonds have emerged as a key tool to mobilize capital to meet climate change. As the Bank of England's Mark Carney said, the development of this new global asset class is an opportunity to advance a low-carbon future while raising global investment and spurring growth. So the challenge for everyone now is implementation of all these ambitious goals to limit global warming to a 2-degree or lower. Sweden has continued to drive green finance forward through pioneering initiatives and issuances, and actually Swedish company Vasakronan was one of the first corporate bond issuers in 2013. And Swedish investors have been driving the green bond market since 2007. And actually, 50 green bonds have been issued in the domestic Swedish green bond market by domestic institutions that have raised more than $5 billion. And another 20 Swedish green bonds have been issued in the international market, 13 of which are actually listed on London Stock Exchange by the NIB, the City of Gothenburg, Stockholm City Council, and SPAB Bank. And also the International Finance Corporation last week issued an SEK green bond, further helping to develop the local currency green bond market. So from the UK perspective, the green bond market has enormous potential, but it's also deeply fragile. And that is why the UK government has recognized the need for intervention in order to lay down the foundations and nurture the sustainable growth of green financing. So the UK has evolved into a model of sustainable finance based on close interaction between social entrepreneurs, mainstream financial institutions, and financial policy and regulation. And in addition, the UK's capital markets have played a powerful role in raising funds for green infrastructure and innovation, not just through green bonds, but also through green equity and investment trusts. And I wanted to outline to you today some of the key pillars of the UK green finance industry, which have played an important role in stimulating not just the green bond market, but generally the green financing space. First of all, as you already know and you've already heard about, is the Green Investment Bank, established in 2012 with an initial cap of £3.88 billion. And since inception, the GIB has backed 58 green infrastructure projects, committing £2.3 billion as part of transactions valued at roughly £10.1 billion. So this is, GIB has played a massive role in helping stimulate the microstructure of and a small projects related to renewable energy, among others. Second of all, very important to the UK capital markets have been investment trust structures that have been used to finance renewable energy projects. These trusts enable investors with a preference excuse me, for liquid equity structures to invest in illiquid assets. 6 UK renewable investment trusts are focused on wind and solar energy. And the attractiveness of these investment trusts as an asset class in the UK has increased after some very important market reforms, which put the investment trusts on an even level with open-ended funds. And the Green Investment Bank, again, has been influential in kickstarting the renewable energy trust market. London has also evolved as a hub for green and sustainable financial bonds. Almost 50 green and social bonds are listed on London Stock Exchange in 7 different currencies, including world's first masala, dim sum, and renminbi denominated bonds. And just as of yesterday, we also had the world's first green bond from the Middle East. And in 2015, the London Stock Exchange, recognizing the importance of green finance, we became the first exchange to launch dedicated green bond segments in order to ensure market integrity, requiring issuers to provide independent green accreditation. And in addition to green bonds, our ESG broader offering includes 14 renewable investment funds and 12 alternative fuel companies, as well as multiple ESG-related indices developed by FTSE Russell. Another very important pillar of the green financing work for the UK has been the Green Finance Initiative of the City of London, which convenes major market participants, policymakers, regulators, and service providers in order to better promote and develop the green finance sector. There's also a very green and growing green crowdfunding sector in the UK In a March 2016 study, more than 121 UK energy projects were identified as having been successfully crowdfunded and provided an average return of 7.3%. Fiscal incentives as well to encourage savings, pensions and investment into the sector are key. The rollout of targeted incentives, such as the Enterprise Investment Scheme, have attracted investment into solar energy before changes into the scheme in 2014 expanded the scope of the scheme to include hydropower, among others. And finally, the UK government's International Climate Fund, which is £3.87 billion, has been vital in order to catalyze green private investment and build markets for sustainable low-carbon ventures worldwide. The fund was launched in 2011. It has supported creation of some of the largest climate funds, created more than 39,000 jobs, and avoided more than 2.3 million tons of greenhouse gas emissions worldwide. So where do we go from here, and how do we finance this $90 trillion of investment that is needed over the next 50 years to this transition to a low-carbon economy? OECD studies suggest that annual green issuance needs to reach 720 billion by 2035 if G20 is going to meet its climate change targets. So this is the year to finance the commitments, and there are various steps that governments across the world have taken already or are looking to take in order to do so. So the question is how this can be done in the short time frame available. And we see three main areas that the governments and regulators have a vital role to play. A, leading by example. B, standardization. And 3, incentive to scale up the markets. So looking at the first point, which is your burning point as well, leading by example. Demonstration issuance and investment from public entities can play a very important role in kickstarting green bond markets, as already shown by the pioneering work that has been done by multilateral development banks. Poland issued the world's first sovereign green bond last December, and France followed with a 7 billion euro bond in January. Nigeria is planning to sell domestic Naira-denominated climate debt this month, and those countries are in the vanguard of a sovereign green bond movement that are expected to be joined by, from what we hear, at least 9 more governments this year. Moving to my next point, standardization and commoditization are essential facilitators of fast-growing markets. A variety of best practices, market standards, and governance models have emerged in the green bond world, including the green bond principles, climate bond standards, and external reviews. And based on the adoption and implementation of these, 3 models have emerged worldwide. A, highly regulated green bond issuance, with rules around disclosure and reporting of use of proceeds, where an approved list of eligible assets is made available and mandatory requirements around external reviews may also be included. And a good example of that is the Chinese market, where green bonds must comply with the People's Bank of China green bond requirements in order to be issued. Second, we have voluntary regimes where there is no binding regulation around green bond issuance, and the bond is labeled accordingly by the issuer. Examples include the deep capital markets in Europe and the United States, which have seen about $82 billion of issuance despite the lack of specific regulation. And third, we have hybrid regimes where regulators promote and draw up voluntary guidelines to support the development of green bond markets without requiring compliance. Examples include France, where the Ministry of Ecology has an official catalogue of eligible green projects and assets, and in the UK most recently, where the Bank of England is developing a term sheet of standardized terms and conditions for green bonds. Each of these approaches is viable and carries advantages and disadvantages, but what is certain is that more consistent standards can support market development, reduce frictions, address the risk of greenwashing and ensure that green investments are contributing to tackling climate change. But at the same time, standards that are too stringent could have the undesired effect of over-restricting market participation or making compliance too burdensome for private companies to engage. However, given the urgency of climate change investment needs, incentives will also be needed, which brings me to my third and last point. The public sector has been financing infrastructure for the past 150 years and is ultimately responsible for creating a clear framework to support infrastructure development. Support tools and incentives can be particularly helpful in the earliest phases of a market as investors gain confidence and new technologies develop a performance and credit history. So central and local governments, regulators, and central and development banks can take measures to scale up green bond markets, including tax-based incentives, such as tax credits or equivalent direct subsidies, that can both attract capital from investors and reduce financing costs for issuers. B, credit enhancement or guarantees from governments and development banks that can support access to low-cost capital in debt markets for companies that promote new technologies or are located in countries with low credit ratings. C, green securitization, which can also facilitate the flow of capital to smaller projects or entities which do not have access to the bond market. And D, green bond indices, ratings and stock exchange segments that promote green bond trading. They have a vital role to play in order to maintain the integrity of the market and increase transparency for both issuers and investors. And there is also a number of more innovative tools that have not yet been used for the development of the green bond market, such as preferential risk weighting or preferential loans from central banks for green projects. So all over the world, just to sum up, there are increasingly ambitious efforts to use capital markets to finance the transition to the low carbon economy, and green finance will be central to that. The next decade will be decisive, and it depends on the investment we make now, whether we'll manage to keep the world on a 2 or lower degree path, or we will tilt towards runaway climate change. From LSE perspective, as being in the center of capital markets, what we can certainly say is that investors, issuers, and governments have all understood that green finance is critical to ensuring we avoid a tragedy of the horizons, to quote Mark Carney. The green economic transition is underway, and London Stock Exchange Group is committed to supporting the market in navigating the challenges and changes ahead. Thank you.
Lillian, thank you. You mentioned illiquid assets. Green bonds are tradable, but rarely traded. Investors buy to hold. Do we need a market for them, or could they just be issued and kept by the investors?
Well, the liquidity in the green bond market has been low, exactly because there is such a short supply of green bonds. So investors who get hold of them, they tend to buy and hold them. However, all bonds that are issued, there is always a secondary market for them. So I think the more we see an increase in supply, the more we see also an increase in secondary liquidity.
Okay.
So
as the market matures, they will be more traded.
Yes, yeah, exactly. And I don't think that the green bonds are considered to be illiquid assets in that sense. It's just that most of the investors are buy and hold. And that is why also on the secondary market there have been some reports that state that there is perhaps even a 10 to 20 basis point price tightening in the secondary market just because there is huge demand for them.
Okay, thank you.
Thank you.
Björn, I'll invite you. You have a few slides. New instructions.
New instructions.
Stand here.
Stand here?
Yeah.
Okay. Where should I put this? take it from
I'll find your slides. But a question...
No.
No. While I find them...
Yes.
You have... there is a lot of money floating around. You issue green bonds. Why don't you issue more bonds?
Well, we have to find the assets. That's the short answer. I'm very happy to be here to see such a packed room. My name is Björn Bergstrand. I come from Kommuninvest. We are a local government-owned credit institution, started in 1986 by 10 local governments in the Örebro County, as a means to provide local governments with better terms for their borrowings. We are now owned by approximately 94% of all Swedish local governments. We are the largest lender to Swedish local governments. I guess most of you are taxpayers in here. I hope so. So you are well aware that the local governments have significant tax revenues. However, they're not sufficient to fund all the investments that the local governments undertake. So that's where we come in. We're Sweden's 6th largest credit institution. Okay. So I'll come back to answer your question. I'm here to talk about how Swedish local governments are active in the green bonds market. But before I do that, I'd like to frame this discussion into the broader context. Why are we active, and what are the local government's contributions to the global climate challenges? You are all well aware, you've probably seen this picture before from the closing ceremony of the Paris negotiations in 2015. That was obviously a pivotal moment to combat the climate challenge. And that has now been translated into a ratified agreement which has entered into force. So that's very good, but one of the interesting things about this agreement for this discussion today is that it's actually about more than the 1.5 to 2 degree target that is being talked about so much. Already in Article 2 of this agreement, there are 3 main themes highlighted. Of course, the first one being that global average temperatures rise should not exceed 2 degrees. 2 degrees above pre-industrial levels, hopefully getting to 1.5. The second point is with regards to adaptation, which I think will be a much more important issue going forward as we see the impacts of climate change taking its effect on communities. We're going to see more investments being undertaken for adaptation purposes. The third point is particularly relevant for us here today, is that the agreement stipulates that finance flows should be consistent with a pathway towards low greenhouse gas emissions and climate resilient development. So in a sense, what the Paris Agreement stipulates is that we should be working, for example, in greening financial markets and capital markets. And that is exactly what the green bond market is about. Given the considerable challenges ahead, of course, transformations are required throughout society, not only with regards to the investments undertaken by local governments, but in all aspects of society. Consumer behavior and lifestyle pattern just being one example. I was told last week that the world's 1% richest have a carbon footprint which is approximately at least 200 times the recommended level. So it's at about 350 tons of carbon per year. So if we're all striving to get to the lifestyle patterns and consumer behavior of the world's 1% richest, that's going to be in complete contrast to the targets set out by the Paris Agreement. Obviously, change is required throughout society and industry, and I've highlighted here in blue the areas where local governments can play a role, given their significant investments to begin with. In Sweden, the local governments account for more than 50% of all public sector investments, and they are principally geared towards real estate and various types of infrastructure. And local governments are obviously also responsible for city planning, so have a large saying in how to develop sustainable cities. Then to Kommuninvest. As I said, we provide finance for local government investments. We've been doing that for 30 years approximately. 2 years ago, in June 2015, we began extending green loans for specific investment projects that target climate and green objectives. So we've developed what we call a green bonds framework, where we can approve investment projects in 8 different project categories. And we evaluate them against a set of sustainability criteria that we've developed. From the June 2015, we've built up a portfolio of approximately 20 billion Swedish krona in green loans. We are approaching 100 projects today in 7 different project categories. They're listed here. Most of them are in renewable energy and green buildings. Water management is about 9%, and we have smaller shares for other categories. We got our first adaptation project early this year. So far, 50 municipalities across Sweden has elected to apply for a green loan. That comes back to your question, Marcus. We are dependent on local governments to want this and to apply for a green loan. And it's a little bit more of an administrative burden than compared with a normal loan, because our clients are requested to tell us what they need the money for, what type of investments, what are the sustainability impact. They're also required to report back to us on an annual basis. So it's slightly more burdensome for them. Definitely a whole lot easier than issuing green bonds themselves, because we take care of all that work and the fair amount of work, as Mats will be told later on this week when we meet the delegation or the inquiry. But as I said, 50 municipalities, there are 290 municipalities in total. So there are a lot more projects coming, we hope, in the future. We've issued 2 bonds, green bonds to date. The first one in US dollar in March last year, 600 million one. The second one in October, it was in Swedish krona, 5 billion. Heavily oversubscribed. We had to tighten the price in order to meet demand. The difference between issuing a normal bond and a regular bond when it comes to pricing is that you only have a limited amount that you can issue, because all of the funds raised goes against these projects that you've specified. So the mechanism to adjust to balance supply and demand is pricing. And this was priced 2 basis points tighter than our regular curve. So the 5 to 10 basis points that you mentioned, or even more, is not something that we've at least experienced in the Swedish market yet. Our first impact report was actually published this morning. I'll come back to that in a minute. But that is... But in a minute, your time is up. Okay.
That's the alarm for 1 minute.
Okay, 1 minute. So I just wanted to mention our environmental committee, which approves the projects. It's comprised of local government environmental experts. Sara from Göteborg is sitting here. And it's critical for us to have this committee of experts. We are not typically approving projects. We provide balance sheet finance. So having the necessary green expertise on board is critical. Then again to the impact report. This is probably the slide that has cost the most amount of money that of all slides I've ever produced. It's taken probably 6 months, a lot of man hours, and a certain amount of consultancy costs as well to get there. So what investors are looking for when they buy a green bond is to know what are the impacts of this, the projects that we finance. And we've tried to quantify that in our report. And we find that in the renewable energy category, we have financed 27 projects. We've approved nearly 9 billion krona. And these projects, they will contribute approximately 1.7 terawatt hours of renewable energy every year. Thanks to my friends at the Stockholm Environmental Institute, I'm able to give you the layman's number, what this means in terms that normal people can understand. 1.7 terawatt hours equates to approximately half of the average European coal power plant. In green buildings, 14.8 gigawatt hours of energy savings, approximately what it takes to run 1.5 times the Mall of Scandinavia out in Solna. So please, if you want to dig deeper into the numbers, you can go onto our website and download this report. We try to be transparent about how we've calculated things, and I hope you find it useful. Thank you.
Thank you, Björn. For being this big, would you say, are you perhaps the least well-known financial actor in Sweden, considering your size?
We use the Wallenberg maxim.
Yeah.
No, we're not so well known, but so we are much better known today than we were 2 years ago, I would say, and thanks in part to the green project. Yes.
Yeah.
Sure.
The green loans you give to municipalities and local governments, are they preferential in their terms, or the cost in order to incentivize?
Well, from the outset, it was exactly the same terms. So it was essentially, you have this opportunity, it's a little bit more work, it's exactly the same terms. And we grew the book from 0 to 15 billion, I think. Then, as of September or October last year, we introduced a very minor pricing incentive, single basis points incentive. And that's being very appreciated because it is a little bit more of work, and one shouldn't underestimate the effects. The finance people and the environmental people, they all have lots of things to do in their daily work, so putting an additional administrative burden on them may make a difference whether they apply now or wait a quarter or two. So a pricing incentive is important.
Thank you. Anna, from Vasakronan, your experience with green bonds, what would you say about the risk of greenwashing in this rather immature market?
I think we need to pay attention to that because I think there is a risk of some greenwashing in the market for the moment. But I think I will come back to that. Thank you for inviting me here today. My intention was to give you a glimpse of how the private sector act in the green finance market. Vasakronan is Sweden's largest real estate company. We have a portfolio of office and retail buildings here in Sweden, valued at 116 billion Swedish krona. We are owned by the AP funds in Sweden, the first, second, third, and fourth AP funds. And we have a mandate to, of course, deliver a high return, but never if it harms the environment and people. And therefore, we need to act in a sustainable way. And of course, dealing with the real estate or properties, we have a quite large environmental impact. And a few years ago, we set out a very ambitious energy reduction target. The target was to become 50% below industry average here in Sweden. And since 2008, we have lowered our energy consumption by 50%. And as a consequence of lowering the energy consumption and by shifting to renewable energy sources, we've also reduced our carbon emissions by 97% or so. Another very ambitious goal we set out a few years ago, and that was to certify the entire portfolio of properties, around 180 properties. Of course, all the new investments, new projects, and refurbishment projects, but also all the existing buildings. And in the fall 2013, we were approached by SEB, Swedish bank. I think it was a few weeks after they had done the first green bond together with the city of Gothenburg. And then they approached us and told us that we think that you could probably issue a green corporate bond. And at that time, we didn't know anything about green bonds, so we were, okay, so what do we need to do? And together with them, we put out a framework, and within a few weeks, we had issued the world's first green corporate bond. Now, I think 3.5 years has passed, approximately, and we think that we need to once again try to drive the market in a good way. And therefore, we are now looking at a new framework where we will both higher the bars for what we will use the proceeds for, and we are also looking into financing existing really green properties, because in our first framework we were only supposed to finance new construction projects and major renovation projects. And another thing that we've paid a lot of attention to in creating this new framework is also about impact reporting. We had a few promises made in the first framework, but now we are trying to higher the ambitions of impact reporting and to asset by asset level report certification type, energy consumption, CO2 emissions in scope 1 and 2, along with water intensity and also waste produced in the building. And this is because of the risk for greenwashing, because we see, at least in the Swedish market and in the real estate market, we see some frameworks that we are afraid of being a bit too light green. And we think that to be able to expand the market without being claimed of or being accused of greenwashing, we think that we need to kind of push the market towards more dark green projects. And I think that was my introduction. So if you have any further questions, or is it time for the panel?
There is time for the panel, but you mentioned the more dark green projects. So is it important that the green bonds are additional, that they attract money to things that should not be done otherwise?
No, I think in the Swedish real estate market, there is no additionality whatsoever in terms of green bonds and projects. Because
projects should have been financed anyway.
Yes, but what the green bonds do is they drive the market towards more green, or a greener property industry. And I think the most important role they play in the private market is that they kind of drive the light towards the non-sustainable or the brown bonds, so to speak. Because a few weeks ago I attended a seminar, and one of the larger investors in Sweden, she was asked about impact reporting, and she said, to be honest, actually I'm not so interested in this reporting. What I'm really interested is the reporting about all the other investments that I have in my portfolio, which are non-green. And that's where I think we have the largest benefits, at least in the private sector.
Thank you. A warm hand to Anna, and the rest of the panel, please come up. Mats, Lillian, Björn, please. The rest of the panel, think of something that you want to address to Mats, something that he should bring with him into his inquiry. Okay, questions that have been brought up are about additionality, whether the green bonds should finance projects that should not have been financed otherwise, the risk of greenwashing, and how do we attract new money that is available but does not find these projects. Please raise your hands and shortly state who you are. We have a running microphone. Oops. You need to stop now.
Okay.
Sorry. Waiting for the audience, Mats, the question of additionality, is that something that you'll be discussing in your group?
I think we will, to some extent, and I think it's important to actually make sure that you get the capital flowing into green investments, and that's why I'm so keen to find a way or incentives. So when you invest green, you will actually get lower risk, or you will have a lower cost of capital. Because if you can get those elements into the equation, I'm sure that the capital will come there. Today, we don't have that clearly link between being green and investing in green bonds. It's more of signaling today, and I think that is important. And again, I mean, it's early days. We need to develop, we need to promote. But I mean, in my view, the biggest challenge is to find this link between being green and actually getting a lower risk.
Yeah. Björn, you said that for your members, especially small municipalities, it's much cheaper to go through you than to issue bonds or green bonds themselves. But still, you mentioned the additional cost. There will be an additional cost in issuing green bonds compared to ordinary bonds. Wouldn't this affect investors?
Well, I mean, it is certainly an additional cost, and it's quite significant, maybe quite significant, depending on who you are as an issuer. We are an institution who has a history in providing, as I said, balance sheet financing. We don't look traditionally into what are these funds going to be used for. For green loans, there's a difference. We actually look into the specific projects, which requires another type of process, as I discussed. But one of the benefits, I think, of the green bonds is the use of proceeds concept, which is a fundamental part of the green bond market, in the sense that we, as an issuer, disclose to the investor what the funds will be used for. That's sort of a novelty, actually. A fixed income investor has traditionally not been given that sort of information before, that this money is funding a preschool up in the north of Sweden with an energy performance of X and Y. And I think
they have not been that interested, perhaps.
Perhaps not, but now we have this discussion and we have this, the climate challenge is for real, and investors want to mitigate climate risk, and green bonds can potentially be a way or a means to do that. So I think one of the important things, and touching what Anna said, is the impact the green bond market can have on the brown market, in the sense, you put it that way.
We have a question from the audience. You are?
Hello, I'm Princess Erica of Ghana. In reference to loaning capital or investments to nations with regards to, for instance, renewable energy, would that be at a higher risk or a lower risk to the nations in terms of interest rates, etc.?
And whom do you address this question to?
Preferably Björn, and also to anyone else who can answer.
Well, I think that if you're able to frame these investments, the renewable energy investment that you're potentially looking to do in a country, if you're able to frame these into a green bonds framework, then I would certainly think there's more appetite for these types of investments in that type of format than if you do it in a normal financing way. There's now, as I think, I'm not sure we pointed out that at this session, but there's a tremendous amount of money available for green bonds or for green investments around the world. And as Mats pointed out, there's a mismatch between supply and demand. So there's much more capital than available projects. So I think it's a better option to frame it in a green format.
And also, if I can just add to that, at the end of the day, the green bond is just investors are looking at the credit. So they will look at the green bond wherever it's coming from, and they will price it according to the credit of that country or of that corporate. If it's a green bond, you get the additional benefit that you get more investors interested. For example, when there was a green bond issued by India's Axis Bank, there were 20% new investors who had never invested in India before. So you do get this additional benefit of more investors looking at the green bond, but ultimately they will look at the credit of the corporate or of the country issuing the bond.
Mats?
I guess the best way, if you want to finance investments in renewable, would be to actually have the right price for CO2 emissions, which we don't have today. If you have a tax reflecting the cost of CO2 emissions, you would actually invest in renewables all over the world.
Now we have a question from someone who launched his latest books at Forest.
I'm Claes Eklund of SEB, the commercial bank that has been mentioned previously here. I think what Anna said at the very end is very interesting, that the green bond market has an impact on the non-green market as well. And you mentioned that too. So question to Mats, will your inquiry be into green bonds strictly narrowly, or will you sort of open the door to what the regulators can do about green bonds, how that can influence the non-green bond market, i.e. how scalability, disclosure, whatever, can be tweaked or changed for the non-green bond market to achieve green bond objectives also for the rest of the capital market? That could be an even more important task than the narrow task that you've defined.
Yeah, I totally agree. And I think that, again, if you find the right incentives for green bonds and green investment, you will actually have a disclosure on what is green. And once you disclose what is green, the rest is non-green. I.e., I think that it will actually drive the risk in the other way for non-green investments. So I think there's the two sides of the same coin, so to speak. But a good point.
For those who want to learn more about this, they need to switch on P1 in a while. Klotet, you want to record, you want to interview a few of the panelists. When will this be transmitted in radio?
Tomorrow at 2 o'clock.
Okay, so tomorrow at 2, you can learn more.
Whenever you want to on the website.
Okay, but not tomorrow at 2 and after. Thank you. Mette. And with that, we thank the panelists and you for coming. And tomorrow at 2 at P1.